Keith here with MI Rich, and I have some horrible news today. Canadian banks are about to crash. Well, at least according to the CEO at Crescat Capital. Now, recently I've been investigating Canadian bank stocks for investing for myself. And I posted a video about what I thought was a good potential buy for myself anyways, about CIBC. Now, in further investigating this, I came across this interview that was on BNN Bloomberg with the CEO of Crescat, which is an investment hedge fund company, I think located in Colorado. And he has this bare thesis that the Canadian banking system is going to crash by more than 50% because Canadian mortgages are too high, which is true, and they will come down very rapidly when China's economy crashes. So this made me think. At first, I was like, well, holy pajama pants. I don't know if this is really going to happen, but maybe I should look into the numbers because, you can doubt people at first, but it's better to have some substance to back it up. And maybe he's true. Maybe I should get a CIBC. So I thought I would look into this. And so his theory is basically the Canadian economy is propped up by Chinese investment. And the Chinese economy has been growing, but is in a growth cycle, basically at the end of the growth cycle. And, originally the growth cycle, they pump in a whole bunch of money into the economy, letting people invest in different ways to help grow the economy. But at some point in the late stages, there's too much debt, and there kind of is a crash so that later on the economy can keep growing. It has to kind of catch all these people who are just doing things not as productive with all this debt money. So when that happens, a whole bunch of free cash flow kind of dries up. And when that happens, these people who have had lots of excess money, the rich people in China, basically can't go around and buy houses in Canada, is the theory. And so if that happens, then if the Canadian economy is propped up, or the Canadian housing market is at least propped up by these Chinese investors, he thinks this will basically just drastically crash the housing market, and the banks who hold many mortgages will also crash with them. So looking into the scenario a little bit more, I was curious. So the Canadian banking system will loan out mortgages to foreign investors, but typically the amount that they loan, or the amount that they have to have a down payment for, is a little bit different. So normally somebody would have to pay maybe 10% or 25%, depending if they're real estate investor or something like that in Canadian housing to get mortgages. But if you're a foreigner, if you want a mortgage for a Canadian property, basically because if you go bankrupt, then at least the property stays in a Canadian bank, so Canada keeps their assets. But if you invest in a Canadian mortgage, then that foreigner would have to pay roughly 35% and would have to deal with the Canadian bank. That's kind of the normal. So that means that the most, whatever banks are claiming as assets, the price of these homes, the most that they would have owing from somebody in China would be about 65% of the house value. So then the big question is, well, how many of these Chinese investors own properties that are mortgaged specifically in Canada. And there's no real record keeping on this. And estimates kind of range widely. They range from anywhere from 3.5% to 20%. 20% is pretty high. It's like 1 in 5 mortgages would be specifically from foreigners. I don't see that, but I suppose maybe in certain cases like Vancouver and Toronto, that's maybe a bit of a stretch, but possible. So yeah, what would that mean for a Canadian bank? So if you look at CIBC for an example, now they have broad categories of what their assets are in, but one category that has mortgages in it also includes credit cards and personal loans and lines of credit, a few things like that. But they consider those assets to be $259 billion about, out of $595 billion in total assets that they have. So that's, you're looking at about half of their assets in mortgages. Well, probably a little bit less, but anyways, just to get a rough ballpark. And currently they have an equity at CIBC for the whole company of about $34.5 billion. So what would happen if this scenario really played out? If the Chinese economy halts drastically and all these people just default on their mortgage. So worst case scenario, which would assume, and here we're also making kind of extra worst case scenarios because we're assuming that all the foreign mortgage ownership is from Chinese investors specifically, and that they don't have any principal paid down on their house aside from the prepayment, or aside from the initial down payment on the house. So it seems a bit unlikely, but anyways, so the worst case scenario that I calculated would be you'd have 65% of the debt owing, and if 20% of mortgages were owned by foreigners or Chinese, you'd have 52 billion or so in assets. So that would mean that there would be a $34 billion shortfall for CIBC in this really bad scenario. And it could be worse because if you suddenly had like 20% of houses that are defaulted on, the banks try to get rid of those, and the housing prices will probably crash because you'll have a lot more houses on demand or available, and a lot of people demanding lower prices because so many houses are available, and banks typically don't want to hang on to houses. They might have to in this kind of scenario, but a little bit, not very long anyways. So the house prices will crash, and if the house prices crash, then what they assumed were the asset value of these houses would also crash. And so you would probably, they have so much debt owing. I mean, the debt might go down a bit, but in general, they'd have quite a bit of debt, like 34 billion that they owe, and they'd have less assets. So they're right around their equity cutoff, and they would probably be going a little bit below that even in that case scenario. So I was kind of shocked because this kind of means this is a possibility. Now, it seems the problem is this is like really on the cusp of possibility because there's a lot of unknowns and a lot of unlikelies, I think. Now, the good case scenario, but still considering all Chinese owned mortgages and they haven't paid anything besides the down payment, you would look at 65% owing on the mortgages still, and 3.5% of Canadian mortgages owned by these Chinese, which would be about $9 billion. So that's still like $6 billion that they would end up having to pay, which would be a significant amount of their current equity. But the $6 billion is really likely less than that for the good case scenario. Like $6 billion would be, for a good case scenario, would be quite a bit lower than realistic. The main reasons are, again, the amount that they owe on it, 65%. Now, a lot of these properties have been purchased over the last like 20 plus years. A lot of these mortgages would have more of the principal paid off already. So I don't see how that's realistic to think that they would have to pay off, just 65% right off the bat. It'd probably be more like, 30 or something like that. Or at least above 50, I would think. So, and then the other thing is the foreign ownership. We don't know. It's between, like people say, between 3.5 and 20%. When I walk around, I don't see that many houses necessarily owned by foreigners. So I would think the rate 20% is pretty high, pretty unrealistic. Now, if you're looking at big condo buildings, maybe they have a higher percentage of mortgages than that. But then again, a lot of people that have been wealthy have also come in and just paid like cash for these things. So I don't know, when they're applying for mortgages, it seems a little bit unlikely that it's that high. And then there's the other question of, are all these mortgages held by Chinese investors specifically? And that's almost 100% unlikely. I'm sure that there's many people who have invested from or gotten mortgages from India or many other countries, maybe the Philippines or Saudi Arabia, something like that, or England. So yeah, even if you were looking at a high amount, if you had 10% of houses or mortgages owned by foreigners, maybe 5% of the 5% total is actually Chinese. So you're probably looking at the good case scenario is more likely. And then the other question I have is, when the Chinese economy slows down, is it really like 100% of these people who have bought properties with using mortgages in Canada going to have no money to pay? So more than likely the economy will slow down. Some of them will default, some won't. Some will have renters that they can kind of carry through and not have to foreclose on the property, or at least not till later. They'll hold off till later. And some people, they're probably good business people, so they won't lose. They won't lose that much money. They won't be going in debt completely, even if there's an economic slowdown in China. So I see this, what Crescat is proposing, I see this as kind of like a 1% chance, but good case scenario is much more likely. So you're looking at potentially an upset in the Canadian banking system if it happens. I think it would be kind of a slow thing. I don't think it would be as fast as the economic crash that these guys are talking about, but hey, what do I know? This is just my opinion. So if you guys have any thoughts on this, if you really do think maybe I'm missing something, or maybe you think the Chinese economy really is going to sink the Canadian housing market and the Canadian banks, well, feel free to let me know your thoughts in the comments. Other than that, I would think I'm going to hang on to my CIBC stocks for a while. So anyways, thanks for watching, and we'll see you in the next video.